Good morning, traders. Welcome to the TMT Stock Market Strategy video for Thursday, February 23rd. All right, guys. Well, we had another very quiet day yesterday. Markets were generally inside day, other than the pundits on the news wires screaming down up 9 days in a row, making new record highs. It's just it's amazing how the pundits really take this market. They don't even know what the market's about. It's just absolutely amazing. It amazes me every day. 30 years doing this. Anyway, very quiet, very subdued type of a day. Yes, the market did pull back a little bit, and then we just saw a slow grind higher into the close to be positive on the day again, creating a very small inside day, if not maybe up slightly. So markets really didn't do anything. Absolutely no volatility, although the VIX continues to hang in there. I'm just going to go through these charts. I'm going to show you the S&P, what I'm talking about when I say if you're looking to buy the market and you think the market's going to 2450, 2500, 2800 for that matter, take a good spot, look at where you are in the charts, and then see if you really think that it's a good buy at these areas, okay? Even though the market does push a little higher, I think the risk is to the downside. I think the markets are extremely vulnerable at these levels with absolutely no volume to even back with this move, so I would be very, very careful, okay? Very careful, guys. Does not mean for you day traders to go out and trade the markets and buy the market during the course of the trading day looking for a pullback. That's fine. But you still have to be very careful. Risk off happens extremely fast. All right, so we have the dollar. You see that we're kind of stuck on above this, which is fine. The more days that you're hanging above this area of 26.15, which is good support, as you can see, the better off your chances are that we're going to break out of this little tiny little base that we have, and we're going to challenge the highs here. Okay. Next is the TLT. Like I mentioned, really no trade here. We're very, very tight in our Bollinger Bands. You can see that we're just hovering the lower end of the base. I'm watching the USB weekly chart. We have a weekly 200-week moving average, 148 and change. I'm going to see if that breaks. Wherever that breaks, if we bounce up, then the market's going to, TLT is going to take this higher. If not, and we break down, well, then we're starting a whole new other leg to the downside, okay, in TLT. Right now, no trade in the TLT. GLD, holding perspective areas here, same thing. Usually, bonds usually follow what gold's doing. So you can see here we're nicely basing at the upper end of this this first leg up, this move. And I'd like to see another test lower to challenge this swing low, or of course this swing low here, and maybe we kind of double bottom here in this area and then start to go higher. That's what I'm looking for before I start getting involved in GLD. Same thing with the GDX. Nice big bullish inverted head and shoulders pattern. We've identified this already. Holding true to the neckline here. Even if it came in a little bit more and challenged this right shoulder, still would say this is valid and ready for another move higher. So I'm still watching the GDX. You can see the markets are paused and waiting for something. They're waiting for another catalyst. But believe me, guys, the markets are made for perfection right now. Everything has to be perfect. It's all you need is something that Donald Trump says that is not, or let's just say positive for the markets, if you will. I think the markets are going to be headed lower, much lower. This is what I wanted to show you. Spiders 21 EMA. This is 2.5% away from the close. Would you buy the spiders up here at 2.5% away? Of course not. Absolutely insane if anybody were to tell you to do that. Look for the pullback. As you can see, you get a pullback and you get to manage, at least touch the 21, and that should be your, if you want to look to buy, look for a 21 EMA or any moving average that you prefer. But you can see as we go lower, it touches it, it gets close to it, and then it either breaks down or it goes higher. Okay, like I said, I think that the risk is to the downside, but if you are looking to buy it, why would you buy up here this extended for 8 days, 8 trading days, literally just straight up? And gapping up every day. So that's what I want to show you. Be prudent in your investing. Make sure that you look for a spot. If you think we're going higher, much higher, then look for a spot that's going to give you a pullback, some sort of a cluster or base before you buy. Not here, not this extended. Okay, the markets are extremely overboard. I'm not saying overboard, extremely overboard. So it's something to need to pay attention to. This is our scenario chart, like we talked about, and you can see, like I mentioned, we're probably going to ride the rails all the way up, and we have done so for the last 2 trading days, and we've had inside days. So there's nothing happening here. Okay, I want to see us take the swing high out. will probably pop higher and then go back to the upper end of the of this trend line, which is, like I've been mentioning, riding the rails, right? Higher, riding the rails higher, and then until we get to around 240 and then dump. That's what I think what's going to happen. We're not even looking for, I'm looking for a pullback. I was looking for something like that. That was scenario 1 to play out, 240 and then dump. But I think that what's playing out, and it doesn't mean that it can't sell off first. It's just that there's no real catalyst here for the markets to go lower, and there's no amble settles. Nobody wants to sell the market, and I just don't understand why. A lot of uncertainty out there, especially with the Trump administration. But this is what we're looking at here. We'll continue to monitor this going forward. Transports didn't do anything, hasn't done anything in at least 6 trading days. Again, sideways consolidation. IWM, we're looking at the 138. Okay, that's going to be one of your first areas that needs to get taken out, and then we're going to go all the way back down here to 134, and that's going to be your second area. Okay, and then the bigger picture on a daily chart is the 38% retracement, and then all the way back down here to about 125. Let's call it 125.50. That's the projected target for the first down leg move, is to break lower. But you could see the 38% coincides nicely with this uptrend line. All right, that'll be really the second. That'll be the first. Here's your second and your third, and then of course the bigger picture will be the top of that area, 125. Okay, that's the IWM. And lastly is the Qs. You can see how ridiculous this is. I mean, absolutely insane. If you're long, it's great, but why would you want to participate on a long side when the markets are this overextended? So again, be prudent, be careful. Absolutely low volume. Let's see what today and tomorrow brings. We're looking for a catalyst. Don't forget, earnings is just about over, and now we need something new to push this market higher. I don't know how much Donald Trump can say or tweet out to move this market higher, but remember, guys, remember what he said when he was campaigning. And a quote from Donald Trump: "We are in a big fat bubble." That was 1,000 Dow points. Okay, just keep that in mind and keep it in perspective. Have a good day. We'll see you tomorrow.